Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everyone's favorite topic, which is, of course, sales tax. Today, Ellie Moffitt, my co-host, is going to interview me about why COVID-19 and the recession should have you worried about sales tax. But before we get started, let's introduce you to Ellie. Ellie, you want to say hi?
Hey, Mike. Hey, everyone. It's great to be here. I'll do a quick introduction for Sales Tax and More, and then we'll go ahead and get started here. Sales Tax and More is a full-service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. We do a lot of returns, registrations, consulting, research, and like our name states, more. So if you have questions about our services, please reach out and ask. We'll give you plenty of ways to reach out and do so. But I'm going to go ahead and get started here. So I think COVID-19 is obviously on all of our minds. It's a crisis in many, many ways. And it's created a recession. We see states talking about how much revenue they're short. Mike, will this have an impact on sales tax?
Yeah, absolutely, Ellie, and unfortunately so. Right now, the states are trying to be nice guys, and they are doing all sorts of, extensions and delays on taxes that need to be paid. But that's making this so much worse. Whenever there's a recession, states get less money. There's less sales, so there's less sales tax. There's less income, so there's less income tax. A recession always hurts the states at a time when the states really need more revenue than ever because they need to help their citizens. So recessions are bad to begin with, but because of the COVID-19, the states have been even reducing their revenue more, making these holes bigger. What typically happens during a recession is once that recession is over, states increase their discovery efforts. They increase their collection efforts. They increase their auditing. Because sales tax and income tax, those are two ways that they can refill their coffers very quickly. So I think that, whenever we come out of a recession, we see states starting to get very, very aggressive. And I don't think this time is going to be any different. The states have a lot of ground to make up.
Yeah, Mike, it's interesting. I was reading an article today about federally, there's talk about extending deadlines even further. And I think this is, from what I could tell from the article, making states panic a little bit. Do you have anything to say about that? Is there anything else that you think you might see the states do in response as well?
Well, two-part question there. I read that same article where, the Treasury Secretary is looking about perhaps extending the federal deadline past July 15th, extending out those IRS returns even further. And, there was a group representing the states, urging the federal government not to do this because that would just make the hole that much deeper. I mean, the states really need the state income taxes. And if the federal returns are getting pushed out, so are the state income tax returns for the most part. So the states are saying, please don't do this. We already have enough trouble. So that's number one. It remains to be seen if we'll get anything. I think the Treasury Secretary was floating a trial balloon to see how it would be received. Now, you asked me if there's anything else we may see states do.
Yeah, I gave you a double question there.
Yeah, that double question. So I think the answer is yes. And again, we go back to recessions. What do states normally do coming out of recessions? So we may see some of these economic nexus thresholds, which are fairly new, we may see the state start to lower some of those numbers. For example, Tennessee right now has a $500,000 threshold. And they are currently looking at dropping that threshold from $500,000 down to $100,000. So we may see more of that with other states. We may see an expansion of the tax base. A lot of times coming out of a recession, we may see items that have not been taxable before, or even services that have not been taxable before, become taxable. They may do this through an elimination of some of the different exemptions that are out there right now, or they may start taxing, new services. I mean, every year, even without a recession, more and more states are looking at more and more services to tax. Also, digital products. These are items that, a lot of states don't know how to tax, or they're so new, the states haven't caught up yet. So I think we're going to see, more services being taxed, digital products, perhaps software as a service. So we may be seeing all of that changed, either through an expansion of the tax base or an elimination of some of the different exemptions out there. And again, we may see some of the thresholds coming down. We may also see some newer taxes. Earlier this year, we had the state of Oregon introduce a gross receipts tax, and we may see more states follow that route so that they can get more state, not income tax, but an alternative to the income tax, because this is a federal law that protects a lot of taxpayers out there. It overrides the state laws on the collection of net income taxes. That's Public Law 86-272. So they're finding ways around this. And for those of you who may not know what Public Law 86-272 is, it's a law passed by Congress back in 1959 that prohibits states from charging or imposing a net income tax if your only activity in that state is the solicitation of tangible personal property. The orders go outside the state for approval, and then they're fulfilled from a point outside the state. So I think that we're going to also see perhaps the states get a little bit more aggressive on trying to find ways around Public Law 86-272. And of course, one of the ways to do this is by passing gross receipts taxes or other taxes like that.
Thank you for that in-depth answer, Mike. I think that's incredibly helpful. And I think something else that is worrying everyone is trying to predict the future here. We've had recessions in the past. Do you think this recession is going to be any different?
Yeah, unfortunately, I do. And, this is almost like the perfect storm. We had the Wayfair case. It was just had its 2-year anniversary the other day. And what the Wayfair case did is do away with the requirement for physical presence for sales tax nexus. And what that means is there's now an economic nexus. And an economic nexus just means that you can create a link or connection with the state, which is what nexus means, by simply selling into that state. And there are two different ways that states, measure this. One is a certain dollar threshold, and the other is a transaction threshold. And some of these thresholds are pretty low. It's $100,000 of sales or 200 transactions. And 200 transactions is a really low number. Now, not all states have transactions, but they, all but Florida and Missouri right now have some sort of thresholds. The problem is not everybody is compliant. And the states know this. They've given you, some time to get around to getting registered and start collecting the tax. In other words, to be compliant. But they that's changing. And we've started to see that change. Prior to any mention of COVID-19, the states had started getting very aggressive. The state of Maine had started auditing people. Their effective date was July 1st of 2018. So, there's 2 years of back tax penalty and collected that they think that people should be paying them. So state of Maine being very, very aggressive. State of South Dakota, which is the state involved in the Wayfair case, very, very aggressive. They're going back to November 1st of 2018. States like Utah have purchased lists where they it's a list of people they believe who have crossed the thresholds in their state. And the thresholds in Utah are $100,000 or 200 transactions. So and that became effective July 1st, 2019. So the state is calling everybody on this list. So they've stopped. Most of these states have slowed down a little bit since the crisis has taken place, but they were already gearing up. States like Texas were already hiring more auditors, and a lot of other states out there. You got to remember that for more than 25 years, the states have been trying to figure out how to get some of this remote income tax. And because of Wayfair, the states can now do so. So they just don't think that people are being compliant, and they're going to go out and they're going to be looking for people. So that's why I think it's different. The states were coming no matter what. Now it's going to be even worse because of this recession. So that's why I say it's really the perfect storm. And while the states are going to be out there primarily looking for economic nexus because it's brand new and they don't believe that a lot of people are compliant, they're going to find all sorts of nexus. So, one of the things that, is going to be popping up left and right, I think, are the use of third parties, independent contractors, subcontractors, anyone who's helping you to establish or maintain a marketplace. You may have been using these types of relationships for, 8, 10, 12, 20 years. So while the states are going to be looking for this economic nexus, which 2 years is bad enough, having to pay, 8 years worth of back tax plus penalty and interest because you've been using independent contractors and just didn't realize that was a nexus creating event, that's part of this perfect storm. And that's one of the reasons why I think, COVID-19 and this recession are just making it so dangerous for companies out there who, for whatever reason, are not moving forward with becoming compliant on these issues. I mean, economic nexus is not going away. Physical nexus has not gone away. It's still a big thing. And, as much as we may wish that Congress is going to step in and handle this, or there'll be another court case, it's just not going to happen, at least not in the short term. And I just think it's going to get real ugly out there for companies that already are hurting because of lower sales, or some companies have done very well during this time, but for all the gains that the companies who have increased their sales, you don't want to give a lot of it back because of state finding you and saying you got to pay all this back tax plus penalty and interest. Penalty and interest can be more than 50%. The total amount of tax owed. Average tax rate is 8%. You got 8 years worth of back taxes, penalty, and interest. This could actually be business ending for a lot of companies out there. I've seen it happen before, and it's not something nice to talk about, and it's not scare tactics. It's reality. So if you're being proactive, you've got lots of options available to you. It's when we're being reactive, waiting for the state to contact us, that our options go away. Recessions, we know that the states come and that they come hard. This recession is not going to be any different, except that I think it may be even worse than previous recessions.
Thank you so much, Mike. And let's wrap it up here. Do you wanna tell everyone how they can contact us, and let everyone know how they can contact us?
Okay. Well, you can go to our website. That's very easy. Sales Tax and More, all spelled out, salestaxandmore.com. Or if you have any specific questions, you can always, ask someone to contact you through the website. But Ellie is a great point to contact too. So you can reach Ellie at eMoffat, that's MOFFAT, at salestaxandmore.com. And, we can let you know all about the different services that we do offer. We also have consultations. So if you need a little bit of help figuring this out, you can schedule a consultation and we'll help you through it. Thanks, everyone. And we'll talk to you next time on our next podcast.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.